I think diamonds to most people is quite hard to comprehend. Okay, because I think there's not too many it's not too many diamond miners out there. They're not really well covered, and therefore, because of that lack of understanding, I think people find it very easy to kind of bypass it and move on to gold, silver, because that's easier to understand. So, can you help me with the macro component? So, Botswana is obviously very well known for diamond manufacturing, finding diamonds in Botswana, but what's the ecosystem for diamonds look like? People know De Beers, but thereafter it's kind of lots of small companies, isn't it?
Yeah, listen, I think the first thing you have to understand about diamonds is it is the only mined commodity that actually doesn't behave like a mined commodity. In other words, we are producing a product which is ultimately sold as a retail luxury good. And so, what's interesting about diamonds is that if you do have a positive view on overall world GDP growth and the emerging economies like China and India continuing to grow, then you have to have a positive view of diamonds. So it is a luxury product. It's not cyclical like gold or copper. And in fact, if you look at the price of your grandmother's diamond ring from 1950 and what you could fetch for it today, it would have shown a steady increase in value year over year.
Okay, but talk to me about the players in the market. That's what fascinates me. There aren't that many. What is the relationship with each other? Who should we be looking at and why? Because like I said, I don't understand where the money's made. Okay, so there's your public company, but I've looked at your share price. It's been in decline for the last 3 years. You've been hit hard by something that must be either the macro or the way that you run your business. So, let's start with the macro. What's happening out there?
Yeah, well, fundamentally, diamonds have underperformed. There's no question over the last several years, and there is a number of reasons for that. But if we talk about the macro, you have De Beers and Alrosa, which account for close to 70% of global production. And then you have the smaller players, of which Lucara is the largest of those. And so we would be, qualified as a mid-tier, but you're absolutely right. This is kind of a polarized community. But diamonds overall, when you look at the universe of producers, there's less than 25 active mines around the world. And it has been a commodity which has underperformed in recent years, but the overall outlook for diamond prices is actually very healthy. And when we talk about Lucara itself, you've got to understand that this is a company that's been in production now for 8 years. We invested $200 million in total capital into Lucara between 2015 and 2018. And between 2014 and 2019, we returned well in excess of that amount. In fact, we returned $271 million to our investors in the form of dividends. Okay, so this has been an extremely successful company. It is a high margin producer, and we continue to be a high margin producer. The challenge has been really around the performance of our peer group and what's been happening with diamond prices in the last few years, which definitely have been under pressure. There's a number of reasons for that. There's been underperformance in the midstream and where diamonds are polished and manufactured. So this includes, India, where we've seen the demonetization of the rupee, challenges with financing midstream polishers, and really, quite frankly, erosions in their margins. So that has created and introduced volatility into the supply chain, and that in turn has had an impact on production. Compounding that, we had new production coming out of Canada in 2017 and 18, largely small diamond production, which put some additional pressure. So it was kind of a perfect storm that conspired to really put pressure on diamond prices. That in turn put a number of the smaller players into default because a lot of the smaller companies had, carrying lots of debt, and it was challenging for them to service that debt. So we've kind of seen a number of factors playing into the overall underperformance. Lucara has been swept into that mix because it is a small peer group, and I think we've been tarred with the same brush. But the reality is we've maintained a very strong balance sheet throughout this period, despite the pressure on diamond prices. We continue to generate high margins. We have no debt on the balance sheet. And in fact, we've got some really exciting growth opportunities ahead of us now.
Okay. Thanks for that. First of all, again, I just want a little bit more from you on the macro. So you've been able to communicate what some of the factors which may have affected the market. You said diamonds are under pressure, have been for the last 3 or so years. But talk to me about, you talk about small diamonds, new producer of small diamonds from Canada. But how does that fit into industrial diamonds versus the retail diamond segment? And what are the sizes of those markets? So,
sure. First of all, the industrial market is relevant to our conversation today. When we talk about natural diamond production, we're really referring to diamonds that feed into the gem market. That's where all the value. Okay.
Understood.
And what we've seen is the pipeline, prior to COVID, which of course has been the latest challenge that all of us are dealing with. But prior to COVID, we actually saw the diamond pipeline, start to really clean itself out. So in fact, in the fourth quarter of 2019, Lucara had one of its, strongest diamond sales from the preceding 3 to 5 years. And so we really felt that we had worked through some of the real challenges in the pipeline, and that we were setting up for a very solid recovery. And of course, then in the first quarter of 2020, COVID hit. And, we see COVID as an interruption of that recovery, not having sent us back in the direction where we were between sort of 2017 and 2019.